Yo, what's going on? What's good? I hope you're doing well. It is Obedi Samotupi, and I'm glad that you're here watching this video. Today, we're going to be speaking about how to treat like a pro and moreover, consistently be able to just win in the market. So if you don't know me, guys, it's Obedi Samotupi. I've been actively trading the markets for the past 7 years now, approaching ages. And truly speaking, guys, throughout this whole journey, there's been a lot of ups and downs. But the most important thing that I've done is that I've become a student towards the markets, and I've decided that I'm going to be sharing my journey with you, so that you are able to just learn as I learn. But most importantly, you are able to just apply some of these things and never go through some of the time waste that I went through. So yeah, let us now get started and let's just focus on what we're going to be speaking about, which is how to treat like a pro and consistently win within the markets. So now this topic is going to be broken down into different types of sections. So I hope that you actually do stay with me up until the end, because as I go down on these sections, that's more important they become. So the very first one is the mindset and the psychological side of trading. So now it's very important when trading to be able to just focus on the psychological side and as well the mindset. So a lot of things that I've seen is that people, they actually go through what we call greed, fear. They have a lot of fear of missing out as well that plays into part. And normally these things happen just because of a scarcity mindset or just because of something you didn't do right within the mindset. Most people, in fact, would also be able to trade when they're not feeling okay, which is highly against the trading world. So one of the best ways that you can go about improving or implementing the right methods is, at first, you need to be able to have, instead of a fear mindset or greed mindset, you need to be able to have an abundance mindset, meaning that if you don't find a trade right now, you need to be able to understand that the market is a continuous cycle, which means that there will be trades that are going to be coming moving forward. And as well, I've seen a lot of people that are unable to actually manage or control their emotions when it comes to trading. I know that there's different types of methods and things, but you need to be able to just find something that you'd be able to be in control of, comfortable with, because this way you'd be able to manage your emotions just so the market never decides for you. One of the most important things that's going to actually push you in terms of you being able to just succeed or get over to the other side is the discipline and the patience that's going to be implemented. So discipline and patience play hand to hand, because with discipline, you are going to be able to just show up each and every single day with consistency. But at the same time, patience, what it does is that it enables you to be able to know that today might not be the day whereby those results or those breakthroughs are going to happen. But as long as you just stay disciplined and you show up every single day, there'll be a time where your patience is going to pay off. So now I did mention the consistency or the importance of consistency. It's very important to understand the long-term goal. And the long-term goal is actually helped also by you being able to just be consistent with those daily activities. Meaning that if you want to achieve something within the next 6-12 months, the most important thing would be you being able to just be consistent on that or towards that each and every single day. So as long as you show up, whether it's a positive or a negative, the most important thing is that's a day or a lesson that is added into your trading success or your trading career. Okay, so now that we've broken down the first section for you, it's very well of us to be able to move over to the second section, where you're going to be learning more about building a robust trading strategy. So the first point in this section is to be able to just choose your trading style. So understand that there's different types of trading styles, which is, first, we did speak about it in the previous video. There's the swing trading, there's the scalper, there's the day trading, and as well the position trading. So it's very important of you to be able to learn these different types of trading styles and be able to see, according to your own personality, according to your own time frames and the way that you study things or the way that you want things to be done, which style fits your criteria, and from there take the style in and then focus a bit more deeper into just trading that style. So now the next point, it would be developing your own trading edge. So when it comes to the trading edge, what actually is a trading edge? A trading edge would be you being able to just specifically look at, right, first your trading style, you look at the currencies, you look at the strategy, you look at the risk management methods, you look at all these things that are needed in order to be able to become a profitable trader. And then you make your own personality out of all these methods. So let's say, for instance, you look at the trading style, which style do you fall into? You look at the time frames, which time frame do you look at as well? The risk management, what risk management strategies are you going to apply? You look at all these factors, you develop something that's going to make much more better sense to you. And the best way for you to be able to just develop and test an edge would be you being able to backtest. Because with backtest, you are able to just see, however that you've decided that you're going to look at the markets, you're able to go back in data, study, and be able to just practice as many trades as possible, just so you know if that actually works or it doesn't. And if it doesn't, you know where to improve, where to tweak, If it does work, you know how you're going to apply this within the markets and be able to just see profits. On this section, we're going to be speaking about mastering the technical and as well the fundamental analysis. Starting off with the technical analysis, at first you'd be able to just notice that in technical analysis, there's also what we call indicators, which could be your stochastic, your RSI, all these different types of indicators that people apply or use on their charts in order to be able to just, maybe it's trend following indicators, it's entry indicators, different types of indicators that people use to be able to just understand more of the technical side of things. So that is just you being able to know more about indicators. Obviously, there's indicators that actually work, but the most important thing is to never rely on all these indicators or even just a single indicator. The most important would be you being able to rely on your strategy, and an indicator is going to be used as an extra benefit to be able to just make the clear decision. So now there's also what we call chart patterns and technical setups. So when it comes to chart patterns, it's more on you being able to spot out those symmetrical triangles, those falling wedges, rising wedges, all these patterns that are going to be able to just help you understand whether the market is going to continue or reverse from where it is now. So in terms of patterns, there's a reversal pattern, there's continuation pattern, which simply means that with the continuation pattern, once you find that type of a pattern in a rising market, it means that the market, as soon as it breaks out of the pattern, it will continue going towards the direction that it was going. And the same thing with reversal. Once the market is, let's say, pushing upwards and it gets to a resistance or at the top area and it starts to, present a reversal pattern, what it automatically means is that once it breaks out of the pattern, there's a high chance the trend is going to reverse and it's no longer going to continue going up, but instead it's going to go down. So those are the two different types of patterns in terms of the reversal and as well the continuation. There's a lot of patterns that are highly profitable compared to our others. I've tested most of them. Literally, I've had like 100 trades on each and every pattern for me to be able to know what works for me and what doesn't. But at the same time, I want us to look at the technical setups. So now with technical setups, what it does is that it just allows you to be able to basically understand the candlesticks, understand what the technical side of things are saying, like support, resistance, understand where the market is, the price action, and being able to just create a setup out of that. So now let us speak a bit more on fundamental analysis. It's very important of you to be able to know the macroeconomics, or most importantly, to be able to just follow through on them, just so you are able to know what the market or how impactful the market or volatile the market is going to be on that day. There's other news that can be able to just show you or help you understand where the market is going to go once those news are released, or once you just maybe follow through with those news releases and stuff. But the most important thing for you here is to just always be on the lookout or alert in order to be able to just know that you're not caught on the wrong side of the markets, but at the same time, you're always protected and you always know what's going on, especially with what you are trading. If you're trading USD, you always need to be able to be up to date with whatever the USD is doing in terms of the fundamental and also the technical side, because this is going to help you be able to just open your perspective towards more opportunities or towards you being able to make much more better informed decision. Yes, I understand that there's experts in just fundamental and at the same time there's experts in just technical, but I highly believe that once you are able to combine the two, don't just focus on fundamental, don't just focus on technical, but combine the two, be able to just see what works, what doesn't, be able to just develop a proper strategy from there. So you know that even if it's just the fundamental side, let's say fundamentals are taking over this week, it's not like you won't find opportunities in the markets, or even if technicals are taking over this week, doesn't mean that you won't find opportunity. You're able to still make a better trading decision when you mix up those technical ideas and also when you mix up the fundamental information that you'll be getting from these news releases. So now let us move over to this section where we are going to be speaking about the risk management and as well trade execution. Let us start first with the risk management. One thing that I like about trading is that there's what we call stop losses and as well take profits. So what does it all help you be able to just limit or be able to just know when to take profit, when to actually close those profits? Because when people mix up greeds and all those things, what they do is that when the market moves in their direction, they hope that it can just continue to rise and they can make as much as possible. Whereby just by taking profit, you're able to offload your risk, because even though your trade is running in profits, there's still a risk to it, which is those profits. It's very wise to be able to take profits and have a method that allows you to take profits nicely and at the same time a risk, which is a stop loss. Most people, I still hear people blowing accounts and doing these things, which, truly speaking, you should not be blowing accounts, especially if you are aware of this information. Because once you apply a stop loss, you'll be able to know how much you're going to lose and you'll be able to see if you're comfortable with the trade or not. And if it's going to be a bit too much, you can reduce the lot size, or you can, maybe find more capital or whatever the case is in order for you to ultimately be confident in that trade But the most important is setting a stop loss and a take profit in each and every trade that you place. So now there's what we call position sizing and risk reward ratios. So with position sizing, it's more on you being able to just observe the market, be able to know where your entry is going to be, your stop loss, your take profit. And then once you've discovered that, when you place a trade, automatically with the risk that you already have, what it will do is that it will show you, let's say if it's 20 pips, it will tell you with your account balance and 20 pips stop loss what your lot size should be. And with that, that's when you can now enter the market. Most people would just want to trade with big lots, but they don't also look at the downsides, or they go in the markets, they place whatever loss that they're placing, but as soon as the trade goes against them, they lose way more than they're comfortable with, and they were not even aware of that. So the first thing you need to do is look at your stop loss, look at the pips that it's at. When you're about to place that thing, calculate how much risk it's going to be, and then that's going to determine also your lot size. And with this way, you'd be able to use your lot size in order to be able to basically know even your take profit, or how much is your take profit going to be, and all this. So let's say, for instance, if you're trading with 10k and you're risking 10% or 1%, which is 100 rands. So with under 100, you know that if you're looking at a risk to reward ratio of 1:3, meaning that you're going to risk 1, but you're going to gain 3, then you already know that your stop loss is going to be at 100. But if your trade happens to go into profit, it will hit or take profit at 300. So you're able to see that, okay, this is how it works when it comes to my risk to reward ratio. So that is some of the things you need to be able to look at. The risk reward ratio helps you be able to know that even though you take 2 losses or 3 losses, that 4th trade is going to be able to bring you back into break even. And at the same time, I even have a video where I broke down the fact that even if you take 100 trades, 75 losses, 25 winning trades, with the risk reward ratio of 1:3, already you are at break even. You're not in profit, you're not at loss, and you're just at break even, you're at 0. But mind you, you took 75 losses and 25 wins. So that's just the amazing part of risk reward ratio. So imagine if you were able to have a much more better win rate with this risk reward ratio. Automatically you are set up ahead. So now let us speak about perfecting your trade entries. The first thing would be timing your entries. I see people, they understand that the market is going to go up or it's going to go down from where it is. And what they do is that they enter the markets same time, on which, truly speaking, that's not the right way to do it. You need to time the markets. You need to be able to just wait, whether it's for hours or for days or for weeks, in order for the trade or the market to actually come to where you want it to be. Because that's when you know that this is where your entry is going to be, this is where your stop loss and your take profit. So it's very important to wait and time the markets. Patience. Remember the very first point that we did speak about. We spoke about patience, discipline, and as well consistency. So you need to be able to be disciplined when it comes to waiting for the perfect entry. Just so before you tick, you need to confirm everything. Is the trend right? Is the pattern showing well? Is there whatever that you're using to confirm, you need to be able to have all those points down and ticked. Now, when it comes to trade entries, and one of the best ways that you can also time the markets is you can use limit orders. So limit orders would be some orders that you can place. Let's say the market is now at the specific price. Let's just say it's 10 price. Right? The price is 10, and then you decide that you want to buy, but you don't want to buy when it's at 10 because it's a bit more expensive. You believe that it's going to go a bit more low, and you want to buy maybe when it's at 8, just so before it goes up, you are able to be in the trade. So because of the fact that maybe you might not be in the markets or whatever the case is, you can still place an order, which is a limit order, which means that you're going to place a buy limit, and then when the market goes down, boom, it will activate you at that 8, and then once it decides to go back up, then now price is now in profit. So now when it gets back to 10, it's not like you're at break even or at 0. You're now in profits because you entered the trade when it was still earlier. So you need to study more or understand how the limit orders work, and as well the stop orders, because there's buy limit, sell limit, and as well buy stop and a sell stop. So you need to be able to just understand these 4. When it comes to managing trades, most people, what they do is that they enter, the trade goes in profits and then they're excited, or the trade goes into negative and then they feel sad. But they don't understand that the trade is not as soon as you enter. The trade is not done as soon as you enter. In fact, the trade started as soon as you enter because you waited so long patiently for the trade to get to where you wanted it to be. So boom, now it's there, now it activated you, now you're in. So what happens now, it's more about managing, being able to just see how you can push the trade up just so you're able to make more. Meaning that if it's going up, you try to push your stop loss a bit more high into profits and move with it, just so even if it goes against you, you're able to still take home some capital. So the most important thing here is managing your trades effectively, but not just managing, but being able to also push up your stop losses, whether it's up or down. As long as you're in profits, you just move it more, trail stop. This is what we call a trail stop. Just so even if a trade goes against you, the most important thing is you are able to go back home with some capital. Okay, so now we're at the last section, which is now you've got the information, you're happy, you're excited, you know what you have to do, you know what you have to study, you know where you have to actually go and, apply certain things in order for you to be able to see change. But let's say now, for instance, you'd like to also understand in terms of the platforms, because at the end, we're speaking about the markets. That means that there's platforms that are involved. That means that there's just communities. There's like literally a lot of things that you can be able to have access to. That's going to make your learning curve be a bit more quicker. Let's say now, for instance, if you just discovered something and, you just want to figure it out on your own. Obviously, it can work out, but it will take you long because you don't know the mistakes. You don't know who's done it before. You don't know all these things. Compared to if you discover something and then you see that, oh, there's actually a community of people that actually succeeded and done this that I can go to. Automatically, you can grow quick. Oh, there's actually this type of a platform that can make things easier or quicker for me. So automatically what it does is that it allows you to grow. So the first thing is there's what we call platforms that we need to use in the markets. The first platforms would be MetaTrader, which is where we basically execute these trades that I did mention. So you need to be able to just download the app MetaTrader, or you can just have a web trader and trade on the website, or even on your cell phone. You can have a MetaTrader on your cell phone, but that's where you're going to be buying, selling, putting your stop loss, you take profit, you're trading, managing your trade, basically anything that has to do with managing and setting those trades. And then there's also what we call a trading view. So trading view is normally where, personally I prefer analyzing the markets on trading view because it has a lot of technical tools, it has a lot of information. Basically, it's just a platform that allows traders to be able to just put the ideas or try to just sketch out what they're seeing in the markets, just so they're able to make those forecasts or predictions of whatever that they're trading. We did mention the technical side and the fundamental side. So when it comes to, technical side, this is where trading view is where you can apply the technical side of things. But now when it comes to the fundamental, there's websites like forexfactoryinvesting.com. There's different types of websites that you can just go out there, get information and be able to follow through with these real-time news that are going to be coming out. There's also Bloomberg that you can just see and get news that are coming out in related to maybe currencies, specific pairs, specific, companies, stocks, whatever the case is, you can still be able to just follow through with these news right here. So now, obviously, you're asking yourself, okay, technical, yes, I know. I'm fundamental. I'm looking at, the news on these platforms that you mentioned. Technical, I'm looking at, trading view and all of this. I did mention also MetaTrader. But you're asking yourself, okay, what am I going to do with MetaTrader? Am I just going to download it and get there? So no, with MetaTrader, what happens is that you need a broker in order for you to be able to just trade on MetaTrader. So for instance, a broker is going to allow you to be able to get access to the markets. So there's a lot of brokers, whatever broker that you go with, it will allow you, or it will give you access to the markets. So now there's differences. There's brokers that are good with spreads. There's brokers that are good with, minimum deposits, 100% bonuses. There's brokers that are just good with different types of things. And for me, what I found out to be the best in terms of the broker that I trade with, it's IQ Markets. I'll also make sure to leave the link in the description. You can check them out. I highly believe that, once you are able to just trade with them, you'll be able to just access the markets with ease. And most importantly, it's a South African regulated broker, which means that we are good to go. Now I understand that most of you guys are like, okay, I'm overwhelmed, I got all this information, you told me everything that I need to know, but I feel overwhelmed, I need a community, I need like support, I need a way people can just be like, within, like people can just understand where it is that I'm trying to go. So this is where communities are going to be coming into very resourceful, because what it does is that communities, it helps you be able to just connect with people that are on the same vision, goal, and path with you. And most importantly, it helps you be able to just let these people spot out your mistakes, show you where you should improve. And at the same time, even for you, just by being around this community, you're able to grow. Mind you, they say you become, the fifth product of the 4 people that you're with. And I highly remember back in the olden days when I started, I joined a community of like 300 people. And then within 2 months, I told myself that I'm going to be the best in this community. I became the best, even the head coach or the mentor within that community. I was like, wow, you're amazing, man. We should do something together. But at that time, already I had different visions. But the most important thing is to join a community that's going to help you be able to just become a better person or become who you were set out to be. And the best community that you can find today is the Forex Chasers community. One thing that I'll do is that I'll just make sure that I leave the description down there. But it's the community that is mixed up with people that are exactly like you. Imagine you watching this video and you feel like, oh, there's no one that understands me, that's like me, that's what. But there's someone that's exactly watching this video, with you right now at this time. And this person is like, oh, I get this guy, he's making sense. And maybe you're also feeling that thing. I get this guy is making sense. So automatically shows that we are all clicking with click. So once we are in that community, automatically it means that we would love to just, grow and improve. And one thing that I love about our community is that don't join if you know that you're not going to be putting in the work, because the most important thing is we are a team of hard workers. We're a team of people that are dedicated, and we're very disciplined and consistent. So each and every day we do take losses, we do take wins, but every day we show up. That's the most important thing. So if you're not ready to show up, obviously you're not supposed to be with us. You can be with different types of people. You can be with other people that are lazy, that will comfort you, or that will be in the same zone with you. But with us, we are heavy workers, and we are here to put in the work. But guys, we just went through the 5 sections on how you can treat like a pro and consistently win within the markets. Obviously, if you have more questions, just drop them down in the comment section. And then one thing that you can do for me is, if you happen to have found value from this video, like, comment, and then also share it with a friend, someone that is close by, in order of them to be able to just share, get this information. I'll see you guys in the next YouTube video. It is a bird from Mutupi, and I thank you so much for watching.